Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you're new here, don't forget to hit that like button and subscribe to the channel so you never miss out on the latest trading insights. Alright, now in this video we're just going to be diving deep into the world of smart money and how they manipulate the market in day trading. All right, we're going to cover the most common manipulation strategies used by big institutions, how to spot them, and how you can stay one step ahead in the market. So, if you are ready to take your trading to the next level, then let us get right into it. First things first, let us talk about what smart money actually is. Now, when we say smart money, we are referring to the big institutions, hedge funds, professional traders who have a massive influence on the market. They move large amounts of capital and have access to information that the average retail trader doesn't. They are not just following the price action, they are creating it. Right now, what makes smart money so dangerous to retail traders is that they know how to manipulate price action to their advantage, and they do this in a way that can fool most traders into making decisions that work against them. So how do they do it? Let us take a look at some of the most common manipulation strategies used by smart money in day trading. Okay, the first strategy we need to cover is known as the stop hunt. Right now, this is one of the most notorious tricks in the book. Smart money knows where most retail traders have placed their stop loss orders. So what they do is they push price in the direction that hits all these stop losses, right, causing a temporary spike or spike in price before quickly reversing. Trying to see if I can find such an example. Okay, it seemed as if we might have had well, this might not exactly be the best example, but we can see that this was a resistance zone, right? Clearly, this was a clear resistance zone, as we can see on the charts. But obviously, when it got to this point, we can see that the price got rejected. But before it got rejected, it surged above the resistance to this point. Now, if you had entered a trade around here, you might have set your stop loss somewhere around here, right? If you had entered a sell trade. Now you can see that the price went above the resistance, and you can see this week, this long week. Right after that, it just reversed back down. So there is a possibility, right? There is a possibility that these big guys might have been involved. Okay, so this is what we call a stop hunt, when the price is pushed in the direction that hits all the stops, causing a temporary spike, and then you see price quickly reversing back in the initial direction. Now, this creates fear and panic, and many retail traders end up selling or buying at the worst possible time, giving smart money the opportunity to capitalize on that move. So, how can you spot a stop hunt? Typically, you'll see a sharp move in price that does not seem to make sense in the bigger picture. It might look like a breakout or a sudden reversal, but if you zoom out and analyze the structure, if you zoom out and analyze the structure, you'll notice that it's just a fake out designed to trigger stop losses before reversing back to its original direction. Now, another popular strategy is the false breakout. This is when smart money pushes the price beyond the key level, like a support or resistance line, only to quickly reverse the price back into the range. All right, so let's look for such an example where we have a consolidation, right? We have a consolidation phase, then it seemed as if price was about to break out, only for a reversal to happen shortly afterwards. So in that situation, it's called a false breakout, right? It's called a false breakout. Okay, I think we might have to proceed if I do not find an example in the next 1 minute. Okay, I think I'm just going to work with this. So we can see that we had a consolidation around here, right? Around here. Now, can you see that it looked as if the price had successfully, you can even see this candle. You can see this significant bullish candle. It looked as if price had broken out of this consolidation to the upside, but just shortly afterwards, can you see what happened? A significant sell. This was no small sell at all. It was no small sell at all. So this was a literal false breakout, right? So this can actually be frustrating, especially if you're entering the market based on the belief that the price is breaking out. To avoid falling for false breakouts, you have to look for confirmation signals such as a retest of the breakout point or volume analysis, and that is the reason why you should also pay attention to volumes. All right, you should also use volume analysis. If you see price moving past key levels with no real follow through or significant volume, it could be a manipulation move designed to get you in at the wrong time. Next up, let's talk about the liquidity grab. Okay, now this is another tactic used by smart money. Liquidity grabs occur when price moves to areas where there is a large concentration of orders, often where retail traders have placed buy or sell orders. So smart money knows that these areas have the liquidity they need to make their big moves. So they push the price in the direction that triggers these orders, causing a quick spike in price. So let's see, I'm just trying to see if we can find an example again. All right. So you will often see, well, maybe I can be able to work with this. Well, it might not be the perfect example though, but you will often see liquidity grabs happening near round numbers or psychological levels or major support and resistance zones. Now, the key to identifying a liquidity grab is noticing the rapid movement of price in a specific direction, then seeing it reverse just as quickly once enough liquidity has been absorbed. So you're going to see a move in a specific direction, then just shortly afterwards you will see the price reversing once enough liquidity has been absorbed. So you have to watch out for these quick moves. They can lead to false trends that trap unsuspecting traders. Now that we've covered the main manipulation tactics that smart money uses, you're probably wondering, how do I protect myself from these traps? Now, the answer is simple, right? The answer is simple: awareness and strategy. The answer is just really simple: awareness and strategy. The first thing you need to do is always zoom out, right? Always zoom out and look at the bigger picture. Okay, price action can often be misleading if you are only focused on short-term moves. So take a moment to analyze the overall trend, key support and resistance zones, and what is happening on higher time frames. Another key strategy is to avoid chasing price. Smart money loves to get retail traders to chase price moves, especially when they are already in motion. So if you see a sudden price surge, right? If you see a sudden price surge, do not jump in right away. All right, wait for confirmation before entering. Now, this could mean waiting for price to retest the previous support or resistance level for a breakout to hold. And finally, use proper risk management. Do not place your stops too close to key levels. All right, if you are entering a sell trade around the resistance, ensure that you do not place your stop loss very close to that resistance. Give some breathing space. All right, give it some breathing space. Okay, some pips away, so that you can avoid stop horns and false breakouts and all those liquidity grabs. All right, so to summarize, smart money uses various manipulation strategies like stop horns, false breakouts, and liquidity grabs to take advantage of retail traders. But by staying aware of these tactics, analyzing the market from a bigger picture perspective, and using proper risk management, you can protect yourself and make smarter trading decisions. So if you found this video helpful, make sure to smash that like button and don't forget to subscribe to the channel for more trading tips and strategies. Stay sharp out there, and I'll see you in the next video. Thank you for watching, and as always, trade smart.